Happy Wednesday. Hopefully everyone's having an awesome day, because I certainly am. It's a nice, cool, I think right under 80 degrees or 78 degrees or something to that nature. It's really awesome. It feels nice outside. Hopefully you can spend some time outside because it's feeling really nice, really especially here in Austin, Texas. It's not the blazing heat that we're used to. But with that being said, we're going to be talking about taxes and the new IRS rules. According to this one article right here, according to CNN, the new rules mean that your paycheck could be bigger next year. I don't think they're going to be bigger next year, but let's see what the Cloud News Network business has to say about this. We also have one from the NBC News. I don't know what I could call them. But let's see what the Clown News Network has to say. I'm pretty sure the other one has some repeat. Inflation may be pushing prices up, but also may help push up your take home pay starting next year. Thanks to inflation adjustments in 2023, federal income tax brackets and other provision announced by the Internal Revenue Service this week, more of your 2023 wages may be subject to lower tax rates than they were this year. And you may be able to deduct a higher amount of income. I mean, was there a law that was passed that I'm not familiar with? It is very likely you'll see more in your paycheck starting in January due to the IRS inflation adjustment, which trend to results in lower withholding for a given level of income, says Mark Luscombe, principal federal tax analyst for Walters Coulter Tax and Accounting. Does that mean for your 2023 filings, you're going to make up the difference? Is this one of those, kind of like you don't have to pay taxes now, but you're going to have to pay taxes later? That's what they don't tell you about a lot of these. Forgot what's the term where they kind of give you a break, but then they charge you towards the next year. Since the changes won't apply until 2023, they won't have effect on your 2022 tax returns that you must file mid-April of next year. Here are some big changes to the IRS making tax income brackets. There are 7 different federal tax income rates which earn income tax rates at 10%, 12%, 22%, 24%, and 32%. And 35% and 37%. Why do we have to have 7 tax brackets? Why can't we have just one tax bracket? I'm being honest. I mean, this complicates things. Because it really does. Because it's actually compounds. When I say compounds, it doesn't really compound, but it has this effect. The more you earn, the higher top rate you pay. That's the rate at which your last dollar is taxed. The IRS inflation adjustment amount is roughly 7% increase in each bracket. I don't agree with that. I think it should either be 10 or 12%, and we should leave it at that. 10% applies to the first $11,000 of income for a single filer, $22,000 for a married couple filing jointly. 12% applies to income over $11,000 and 22 for joint filers. 22 applies for incomes over 44,725 and 87 4,500 or 450 for joint filers. 24% applies to income over $95,376. This is probably going to be the bulk of most people right here between these two. So it's going to be between 22% and 24%. So roughly maybe 22.5% or 23% taxes that they'll be collected. 32 applies to income over $182,100 for a single, and then $664, $200 for joint filers, 37. That is a lot of percentage. That is a lot of percentage. It's almost 50% of the income over $578,125 and $693,750 for joint filers. That is a highway robbery. Yeah, I get it. You know, the rich don't need to pay their fair share. Yada, 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 yada. It should all be between 10 to 12% or even 15% between all brackets. All brackets. Standard deduction with the most filed claims will go up by $900. That's to $13,850 for single people and by $1,800 to $27,700 for married couples filing jointly. I don't exactly agree with the joint filing, but it is what it is. That's the rules that we are dealt with, or that's the cards we're dealt with, and we gotta play by the house rules. The standard deduction is the dollar amount that those who don't itemize deductions can subtract from their adjusted gross income before federal tax is applied. Healthcare flexible spending accounts contribution limits. Next year, you'll be allowed to contribute $3,050 to a flexible spending account, which can cover some of the out-of-pocket healthcare costs not covered by health insurance. That money is dedicated so it will reduce the amount of tax taken out of your paychecks. I don't really agree with the flex spending account because you're limited of how much money you could take out and what it could be applied for. If you use it for something else, you'll be heavily taxed on it. So I don't agree with putting limits on my own money that I've earned. That's just my personal opinion. I know other people are able to take advantage of it, which is great. I mean, everybody's different. Everybody's situation is different. My path may not be your path, or my path may be similar to your path. That money is deductible, so reduce the amount of tax taken out of your paycheck if your employer plan allows this and you carry over the unused portion to your FSA amount. The maximum carryout permitted will be $610, $40 higher than this year's maximum. So you can't even carry over. You have to use it or you lose it type of situation. Earned income tax credit enables low-income workers to keep more of their paychecks. However, they may not get paid the money until they file for their 2023 taxes in the early 2024. The IRS raised the maximum amounts that one can claim by about 7%. For example, a qualified taxpayer with 3 or more qualifying children could get a earned income tax credit of up to $7,470, not 70, but $7,430 in 2023, up from 600. That's 600. Why don't I want to say 600? I don't know. It's 6,935 this year. Apparently, I can't read numbers, but that's all right. And that's what the Clown News Network business said. And honestly, I think everything should be between 10 to 15 flat rate. It should be a flat bracket. One bracket rules them all. Now I get there's people saying, but I make less money, so that can't be equally applied because I need every dollar I can keep. Well, you know, we need to simplify the tax code because 7 tax brackets, that means anybody who makes over this much money will be taxed roughly between 35% or up to 37% the more money that you make. You even at 10%, they're making more of a payment to the government. I just don't agree with the different brackets. I think it should be just one bracket to rule them all. According to the CBS, American tax brackets are changing thanks to inflation. That'll be welcome news for many whose salaries haven't been keeping up this year with the highest price increase in 4 decades. Maybe because maybe Congress passed, I don't know, $6 trillion in spending. They even couldn't even stop spending with the Inflation Reduction Act and added more into the inflation. I mean, might want to start there. The announcement of tax bracket shift comes a week after the Social Security Administration revealed the largest inflation adjustment for fixed income beneficiaries in generations. And I believe the Social Security insurance needs to come to an end. It was temporary. It was signed into law for the Great Depression. It was only supposed to be meant for the people that are about to retire or already retired that got their savings wiped out during the Great Depression. And then I think 2 to 3 presidents later, it was signed into law to be permanent. Instead of robbing us now and later, because there's a good chance that not everyone's going to get all the money back that they put into Social Security, especially if you're a high earning wager and you have a crap ton of money in the bank, you may not qualify for the full benefit of Social Security. So you pretty much dumped a crap ton of money into Social Security and you won't be able to use it. And I also don't think that is fair. I mean, I get it. It helps people that don't make a lot of money be able to retire comfortably. So I do understand that there's benefits to it. I just don't agree that we should be forced into a forced retirement program that we may not get the full effect on. Tax brackets move along the side of inflation, meaning that the amount of tax you pay on your income gradually shifts in normal times, but persistently high inflation consumers have been facing this year is anything but normal because you keep on spending. Congress keeps on spending. So the tax brackets are moving to offset that. That's good news if your wages haven't yada 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 yada. Yeah, it's pretty much the same type of information that was on the Clown News Network. Almost verbatim, just a different format. So I'm not going to rehash it. Uh, it's just pointless to rehash it. But anyways, that is my video for today. Probably kind of a shorter one than normal, or my new normal. But that being said, leave a comment down below. What are your thoughts about the new tax rates? And which tax rate do you fall in? I'd be curious to know. That being said, please smash the like and subscribe button on any and all platforms or just a platform that you're currently watching. But most importantly, have yourself a wonderful day, morning, or evening.